Hey everybody, Brian here. Today is Monday, the 26th of May, Memorial Day. Thank you to all of those who have fought for our freedoms that we enjoy, such as being able to look at the markets and trade them each and every day, that they're open. And they are open today. They've been open since 6 p.m. Eastern last night. What we're looking at here in the upper left is the S&P 500 futures 1-hour time frame. Below that is the NASDAQ 1-hour time frame. And to the right of them, we have the 10-minute time frame for the S&P and the 10-minute for the NASDAQ. Let's focus on this hourly chart first. This is something you see me post often, which is in this case, it's 1 hour for the futures, and we've got this orange line here. This is the 5-day moving average. 5 simple, not exponential. I've done a lot of work looking into it. The simple is a better usage for the 5-day average than the exponential. Trust me or don't. Either way, what we're looking at here is I designed this to represent that when we're above a rising 5-day moving average, it is green. It doesn't mean buy. It means we're in a bullish, favorable environment on this time frame. Doesn't mean that a different time frame might represent something else, but on this hourly time frame we have been bullish, and then last week we kind of started to turn sideways a little bit, and then that became yellow because we were below it, but it was the 5-day moving average was kind of flattened in here. As we made a lower low and we were below the declining 5-day moving average, that's when the intermediate term trend turned bearish. In this case, I always say don't buy the dip, wait for strength after. So what does that mean? Well, we can look at, for instance, back here. Don't buy that dip, buy strength after. So would you have bought this gap up? Maybe you would have, or maybe you would have bought somewhere over here and been able to participate in all of this green. The bottom line is you don't have to buy the dip, because what happens when you buy the dip? Well, what if we were looking back at April when you were buying the dip right over here and you thought you were you thought you had a low at 55.60, and then it rallied up to 56.70, and you thought, hey, great, I picked the bottom. Well, then a couple days later, as we dropped down to 4,900 and officially entered bear market territory, you weren't feeling too good about those dips. You weren't feeling too good about these dips all the way down here either. So right now, I see people, saying, I'm so glad I bought the dip, and you know what? Maybe they caught the bottom of this move, and that's fine. What I look at, though, is we're right up to the anchor from this gap, and that was prior support. Support broken, 10 stacked as resistance. It doesn't mean it's going to. It doesn't mean I expect it will, and I'm making a big bet based on that. Instead, maybe we do something like this Monday morning or Tuesday morning. Maybe we do this, and I would much, much, much rather be a buyer over here than just trying to blindly buy the dip. Now, on Friday, I did mention to subscribers, hey, here we have, at this point, I said, listen, we've got this anchor off of this low. We're going to put a provisional anchor there. And guess what? We bounced from that, and there were some great day trade opportunities. And if you wanted to buy strength after the dip and think that this was the low, well, the strategy would have been, okay, maybe buy somewhere in here as it's bouncing off the anchor off of Friday's low, and then set your stop somewhere down here. But simply just saying buy the dip is one of the most meaningless things you can say, because do you buy this dip here? Well, if you bought right there, guess what? You're right at break even. And same thing over here. If you buy this dip, where does your stop go? Did you take it for a profit? Great. Or did you get stopped out right here as it went to a small loss or a bigger loss? Or, did you average down? The point is you need to have a strategy. And that strategy is dependent upon what your focus is for time frame. My time frame is swing trader. I'm not concerned at all that I haven't bought this dip down in here. To me, those are uneducated purchases. And yes, sometimes you can, get lucky and make that work for you. I'm a professional. I like to see evidence before I buy. Friday, same thing with the NASDAQ. We came down, in this case, right to the month-to-date anchor, something I had pointed out. And we put that provisional anchor on this chart here as well. And we had some beautiful pullbacks to it, which could have been purchased, the strength after the touch of the VWAP, and, to buy it here with a stop under there. Or buy it, even yesterday as the market opened, right here with your stop under here. Great. Now where are we? We're right at that 5-day moving average. We're right at the anchor from the beginning of last week. So that was last week's anchor. And we have this level as potential supply. Does it mean it will become resistance? Don't be foolish. That's hindsight. This is not, we're not looking at hindsight. We're looking at a professional approach to the market. Even here today on this Memorial Day, when you should be out doing something or looking at a chart as I am, we can look at that chart of the NASDAQ futures. And how do I get rid of this? Let's turn that off somehow. Let's delete it there. Maybe that did it. Anyways, it's still drawing. So let me try to see if I can do that. Okay, so here's our volume weighted average price since 6 p.m. Eastern yesterday. We rallied very quickly. We came into that 5-day moving average. We pulled back. And here, if you're sitting here watching this today, trading it, where do you want to be a buyer? Right here. Not as it pulls back. You don't want to buy the dip. And sometimes you look at it and say, well, I should have bought at the VWAP. Well, a lot of times it will just continue down through the VWAP. The VWAP on this short-term time frame is a level of interest. You say, okay, let's see if the buyers show up. Once we have evidence that they show up by bouncing off of it, not as it's touching it, but as it's bouncing away from you, you say, okay, that held for now. Let's buy right here. This moment of indecision, when you don't know that this is coming, you say, okay, I'm willing to buy here with a stop under here. I'm going to start this out as a day trade. If I don't get stopped out and the stock in the market continues to rally and it makes a pattern of higher highs and higher lows, I'll keep raising my stop under those and I'll let the market decide when to tell me to get out. Anyways, the whole point here is don't feel left out. The S&P 500 futures are up 1.2%. NASDAQ up 1.4% right now. You didn't buy the dip. Well, guess what? Congratulations on not buying the dip. Because what if we didn't have some news that instead we saw the market do something like this? This was certainly possible. Do you want to trade based on probabilities or endless possibilities? For me, it's about probabilities where I can manage risk. That's all for today. Enjoy the rest of your long weekend, and thank you to all those who fought for our freedoms.